Welcome back to the channel, and welcome to today's Crypto Daily Roundup. Prices have moved, narratives are shifting, and a few stories are starting to stand out as real signals of where this market could be heading next. The scoreboard matters, but the stories behind the numbers matter more. So we're going to do both. We'll hit the top 10 first so you have the snapshot, then we'll get into the day's biggest movers and narratives. Dogecoin's institutional twist, XRP's fight with the $3 ceiling in the ETF whisper mill, and the quiet but powerful boom in tokenized treasuries that's rewiring crypto's base layer. Let's get you aligned. Bitcoin is around $111,600, up just under 1%. It's not fireworks, it's conviction. Every dip under $110,000 lately has been met with real bids, and that tells you this market has changed. The people buying here are planning to hold through volatility, not flinch at it. The $111,000 to $112,000 band is turning into a comfort zone, and comfort zones in crypto are staging grounds. Ethereum is near $4,367, fractionally red on the session, but still carrying that monster 5-month run of about 200% on its back. The label digital oil doesn't just sound good in a headline, it reflects something deeper. Throughput, settlement demand, and a clean institutional wrapper via spot ETFs that makes it easy to buy and easy to hold. The immediate watch is the $4,500 lid. If ETH pops that with volume, $5,000 stops being a meme and starts being a magnet. XRP is trading close to $2.87, a whisper of green after a string of red sessions. For most coins, that's just price action. For XRP, stability is the headline. Legal clarity, nuanced, yes, but meaningful for retail trading. Lets institutions look without squinting. The chart is simple. The community wants $3. Break $3 with a weekly close, and the conversation shifts from range to run. BNB sits around $841. It's doing what strong base layer tokens do mid-cycle, hold range while the market decides where beta goes next. The story here is not hype, it's utility, fee economics, and the ability to keep activity sticky when attention swings. Solana hovers just under $200. Every cycle has its risk-on engine, and this time Sol keeps playing that role. When traders want speed, composability, and a shot at higher torque, they look here. The number to watch intraday is $200. It's clean, it's round, it's psychological. Reclaim and hold above $200, and rotations come alive. Cardano is around 81 cents. It isn't shouting, and that's fine. Its strength is that it can sit quietly and still attract patient money. If the market moves into broad alt rotation, coins like ADA often catch a delayed bid as portfolios rebalance into laggards with liquidity. Dogecoin trades near 21 cents. Meme coin? Sure. But dismissing Doge is how people miss Doge. The community is relentless, the brand is mainstream, and as you'll hear in a minute, there's a new institutional twist that could reframe the conversation if it sticks. Technically, 22 cents is the near-term trigger. Break it with a rising 1-hour OBV and you'll feel it. Tron is steady at 33 cents. Sideways isn't glamorous, but sideways at elevated levels is how floors form. TRX often looks dull until it doesn't. Watch the funding and stablecoin flows on-chain. When they lean, TRX usually leans too. Toncoin holds around $7.10. It has the rare combo of brand buzz and real throughput claims. Newer entrants that keep printing higher lows while attention oscillates deserve a spot on your dashboard. If $7 keeps acting like home base, the trend stays intact. Avalanche is at $39.60, effectively flat on the day. AVAX tends to travel in bursts, long stretches of nothing to see here, then a week where it does 3 weeks' work. The key tells are partners, subnets, and RWAs. The more those show up in real integrations, the more patient capital will tag along. That's your top 10 snapshot. No stables, just the tickers that matter. Now let's talk about the stories behind those numbers, because that's where edge begins. The first story is Dogecoin, and it's the kind of headline that would have sounded like parody a few years ago. CleanCore Solutions, a US-listed company, has announced a plan to build what it calls the House of Doge, backed by $175 million to create the first official Dogecoin treasury. The aim is simple, bold, and controversial. Position Doge as a reserve asset. Yes, reserve. As in something a corporate treasury can hold with intent, not just meme with for clicks. The cast is wild too. Links to the Dogecoin Foundation, a treasury framing, and Alex Spiro, Elon Musk's lawyer, stepping in as chairman. Now let's be honest about the market's first reaction. CleanCore's stock got smoked, down almost 60% after the reveal. Equity investors essentially said, "We don't buy it." But crypto is not equity, and reaction functions here are wired differently. In crypto, audacity is oxygen. The mere act of trying to institutionalize Doge is narrative fuel, and narrative fuel in a liquid market is tinder. So what is a Dogecoin treasury, practically? Think of it as a pool of Doge held with explicit policy goals. Be a balance sheet asset, enable Doge-backed deals, maybe generate staking-style yield through programmatic strategies, and ultimately make Doge more than a cartoon dog with a price. If that sounds like a stretch, remember how ridiculous Bitcoin as digital gold sounded in 2013. Narratives laugh at you until they don't. A reserve asset begins as a story, then finds the infrastructure to back it up. Will it work? Tokenomics skeptics point to the approximately 5 billion minted each year and say, no way. They argue real reserve assets don't inflate like that. But in practice, reserves live or die by belief plus utility. If Doge can be pledged as collateral, if it can be used to grease real transactions, if a liquidity network builds around it, inflation becomes a parameter to manage, not an automatic DQ. The counter-argument is valid. So is the vision. That tension is exactly why traders care. Zoom into the chart. 22 cents is the near-term hinge. Above 22 cents with expanding volume. And the Dogecoin in a suit story turns from dunk fodder into a live trade. Below it, and we're back in chop. Either way, keep one eye on meme beta. When it moves, it often drags cousins whether they deserve it or not. Second story, XRP. After 6 straight red days, XRP put up a green candle and stabilized around $2.87. That, by itself, is not headline material. The headline is where the narrative is pointing. The ETF conversation. With Bitcoin ETFs showing how quickly hard to buy can become push button, and Ethereum ETFs proving it wasn't a one-off, the natural question is, who's next? There's no official filing you can hang your hat on right now, but here's why XRP keeps coming up in those conversations. Legal clarity for programmatic sales in the US after the 2023 ruling. Not blanket clarity in every context. Institutional sales were treated differently, but enough clarity for retail exchange trading to feel less radioactive. That clarity matters for 2 reasons. 1, it makes listings and liquidity easier to defend for exchanges, which boosts confidence for larger pools of capital. 2, it lets the thought experiment exist without a hard no. Today's tactical picture is clean. $3 is the line. It's round, it's psychological, it's where sellers have been happy to sell. If XRP can close above $3 on real volume, you open a path where $3.50 to $4 is not a stretch in a bid-up market. Fail again at $3, and you'll hear the same criticism. Lots of talk, not enough walk. Either way, it's an honest level, and honest levels are good TV. Now the third story, quieter, bigger, and a little more grown-up. Tokenized treasuries on public chains just pushed to roughly $7.45 billion in assets. Let me read that again. US government debt on-chain at scale, being held and moved by crypto-native rails. The BlackRock Boidal product is the whale, around the multi-billion mark. And here's the nuance that matters. Some exchanges now accept tokenized treasuries as collateral. That's a line we hadn't crossed 18 months ago. It means you can park your base cash in short-duration yields and still have collateral that moves at crypto speed. For funds and desks that live on basis, funding, and margin efficiency, that is a structural edge. This matters beyond traders flexing spreadsheets. It's a trust story. Big asset managers, BlackRock, Franklin Templeton, Superstate, aren't thinking about blockchain anymore. They're using it. They're wiring audited, regulated, yield-bearing funds into the parts of crypto that never sleep. Stablecoins gave crypto a dollar leg. Tokenized treasuries are giving it a yield leg. when your cash can earn 5% plus, while it waits in a wallet that's composable with smart contracts. The entire ecosystem's incentives change. Idle capital becomes productive collateral. That forces protocols to compete on utility, not just APY marketing. So, what matters most today? 3 things. 1. Whether Bitcoin keeps shrugging off dips below $111,000, because that's the engine of everything. 2. Whether Ethereum takes a clean shot at $4,500, because that flips impressive rally into new regime. And 3. Whether XRP can finally stop flirting with $3 and actually move past it on real volume. If 2 of those 3 go your way, you'll feel it across the board. Before we close, a quick reminder that wins are built in the boring minutes. Journaling your trades, setting your levels the night before, and keeping your security tight. Markets are generous until they aren't. One exploit, one rug, one bad custody habit, and months of good decisions can get wiped. Don't let that be your story. If you haven't already, grab that ledger via our link, rotate your most important holdings into cold storage, and sleep like a person who plans to be here for the next cycle too. Let's wrap. Bitcoin resilient, Ethereum strong, XRP steady with a shot at $3, Dogecoin wearing a suit and asking to be taken seriously. Tokenized Treasuries quietly turning crypto's cash leg into a yield engine. Underneath it all, builders are building, and the rails are getting faster. If you listen past the noise, you can hear the next phase arriving. Make sure you're following us on Spotify, and we will see you at the top.